Good morning, good evening, good afternoon to everyone. My name is Lorna Grace. I'm the lead regional technical specialist here at IFAD, Rural Finance Markets and Value Chains. And today it's my great pleasure to welcome you all to our continuing series and webinars from the Inclusive Rural Finance Network. When we last met, we heard about private sector engagement for adaptation finance, and this time we bring to you an interesting discussion in conjunction with the Financing Facility for Remittances, supported by the Platform for Agriculture Risk Management for Development, FARM-D, and hosted by the Platform for Agri-Risk Management, PARM, who is ably represented here. The theme of our discussion and our webinar is unlocking the potential of remittances for financial inclusion and rural development. And we are really privileged today to have speakers from not only Financing Facility for Remittances, but also Swedish SIDA. I'm Canadian, so we always say Canadian SIDA, Swedish SIDA, so Swedish SIDA, Fidelity Bank in Ghana, and NATCCO in the Philippines. But first, we welcome our Managing Director of the Office of Technical Delivery here at IFAD to provide us with a few recorded words of introduction and hopefully wisdom. And so this is Pieternel Boogaard, Managing Director of IFAD's Office of Technical Delivery, with a few words on the remittance markets.
Good morning, colleagues and friends of the Inclusive Rural Finance Network. It's a pleasure to join you today, unfortunately not in person, but via this video message. During today's webinar, you will discuss the relevance of money transfers or remittances and financial inclusion. Both are at the heart of rural transformation and development that we are keen to support. And each year, more than 200 million migrant workers send money home to over 800 million family members. And that amounted to almost 700 billion that was sent in 2024 to developing countries, where generating an income is an issue. These flows, these remittances, can therefore support the daily lives of millions and the most vulnerable. They can cover essential basic needs such as food, education, energy, housing, healthcare. And remittances are often used for these kind of short-term needs and immediate consumption. But when families have access to transaction accounts, to saving accounts, to credit, insurance, digital tools, they can use these same remittances not just to survive, but to build lasting prosperity. But today, not everyone has access to financial services and products that allow them to do this. So we therefore need to improve financial inclusion as a tool that transforms these flows into long-term instruments for economic empowerment, for financial stability, and even climate resilience. Therefore, we at IFAD are proud to host and support the Financing Facility for Remittances, which has worked for so many years to make remittances more impactful for rural families. During this webinar, we'll hear more about how our team supports remittances and improves financial inclusions across regions. And this conversation is especially timely as we approach the International Day of Family Remittances on June 16. It's a day that was initiated by IFAD 10 years ago and adopted by the UN later. And this day is meant to recognize the contributions of migrant workers and the vital role that remittances play to improve the lives of millions. So with this, I thank you for your willingness to participate in this webinar on such a relevant topic, and hope you will be left with useful insights and takeaways that will support our combined effort. Thank you very much.
Okay, a virtual thank you to our Managing Director. And I now want to turn to our in-person virtual speakers. First, there's Therese Anderson, Program Specialist at SIDA, managing the support to FFR, or the Financing Facility for Remittances. And she will be sharing their SIDA's view on the relevance of FFR's work from the point of view of their global strategy. So over to you, Therese.
Thank you very much. Thank you for inviting Swedish SIDA to this event, and also for the possibility to say a few words. SIDA has supported FFR since 2020 from our global strategy for global sustainable economic development, where the volume of remittance flows to low and middle income countries, as well as the number of people and household involved in sending and receiving remittances, show how important it is to understand these flows and also to work towards solutions that enable remittances to not only contribute to the essential needs, as the managing director alluded to as well, but also be a catalyst for financial inclusion and more sustainable development impact, not least in rural areas. And I would like to highlight two particular strengths that SIDA sees with the way that FFR is working. And one being the broad approach that FFR is taking with strategic policy engagement at global, regional, and national level. From SIDA's global strategies, we recognize the importance of global commitments, global architecture, global partnerships to solidify a framework that enhances the conditions to work and to achieve progress at regional and national level. And there are several examples of how FFR contributes to this, not least the work under the objective in the Global Compact for Migration, focused on remittances and the development of indicators for this, the work with the Progress Declaration at the International Migration Review Forum, where member states committed to strengthening their efforts on this, as well as your work to strengthen language around remittances and links to financial inclusion in the FFD4 outcome document for the conference in Sevilla this summer. It's all just examples of important global level work that also foster progress at regional and national level, where FFR is also active in implementing innovative projects with different kind of actors. And this really is sort of full circle approach that SIDA really appreciates. The second strength I would like to highlight today is the relevance of data and the fact that IFAD and FFR is contributing to reliable remittance-related data being gathered, being made available and easily accessible in order to support informed and evidence-based policy-making and decision-making for different types of actors at national level. And I can say that for us as a donor, we have RemitScope, as I think you will hear more about later in this session, as one of our sources for data to consult when we do our poverty analysis at country level, to feed into the analysis of the overall financial flows in a country and what could be done to maximize the development impact of those flows. I will stop there today. Thank you again for letting us share a few words from our perspective as a donor. Thank you.
Thank you, Therese. I will now turn, we don't have a lot of time, so I'm going to quickly go to Mauro Martini. He is the Senior Technical Specialist of the Financing Facility for Remittances at IFAD, and he's going to give us a remittance market overview. Thank you, Mauro.
Thank you. Thank you very much, Lorna, for the introduction. Thank you very much also to Therese for the nice word. It's always a pleasure to see how our work help strategizing also the policy engagement of our member states. So let me share my screen very briefly and go through my presentation. I hope you can see it. What I would like to do today, Lorna, is to give you the context. What are we talking about when we talk about remittances? Some of you might be familiar with some of the figures and concepts that I'm going to share, but I believe it is important to set the stage properly and understand clearly what we are talking about. The first thing that I would like to share with you, and let me start with this impressive amount, is this. We heard our managing director in her opening remarks mentioning it, and it doesn't hurt to remind it. This amount is really astonishing. 685 billion US dollars were sent by migrants last year, according to the last estimates. This is really a huge amount. What I like to do sometimes, and I did it yesterday evening, is to do some calculations. So you can see another figure here on the screen is 100 million. Just to understand a little bit the context, what we are talking about when we talk about remittances is that this 100 million is the amount sent by migrants during the period of this webinar, more or less. 100 million US dollars in little bit more than an hour. So you can really understand the impact that this amount can have on their families and communities back home. If you want to know more about the geographical distribution of the remittance flows, you can see from this map that almost half of it goes to Asia, 320 billion US dollars in 2024. Then you have Latin America with 150 billion, then almost equally divided between Eastern Europe and Central Asia, the MENA region, and Sub-Saharan Africa with between 80, 70, and 65 billion for each region of the world. Now, again, remittances are an incredibly high amount of money. They are almost 3 times global ODA, as you can see from this graph here. They are above FDI, foreign direct investment. They basically are more than FDI and ODA combined. But what it is very important to understand from this map is that you can see the remittances. They are the red line. They are a very, very stable and continuing growing flow, especially in times of crisis. We can see also. We have seen it also during the COVID period. Remittances remained stable. So to demonstrate really the resilience of migrants that keep sending money to their families back home because they are very aware of the importance of those flows for their families back home. The last figure that I wanted to put on the screen is this one. It's a small figure compared to the huge amounts that we saw previously, but maybe actually probably this is the most important amount. 200. 200 is the average amount of our remittances transaction. Remittances, we know, are cross-border person-to-person payments of a relatively low value, and they are first and foremost a private flow of funds between family members. Nevertheless, they offer great development possibilities for the entire communities and countries where they are received, and this is what we are going to go through it today. They are lifelines for the migrants' families, but also for the economy as a whole. In the graph in front of you here, especially on the left side, you can see how many countries are receiving a percentage of remittances which is extremely high in comparison with their GDP. Look at Tajikistan, more than 45% of their GDP is equal to the remittances received. 38% Tonga, more than 27% in Nicaragua, Lebanon, Samoa, and just you name them. So you can understand the enormous impact that remittances have on the economy of the countries that are receiving remittances. This is another real reality check. It is taken from the OECD States of Fragility report. It's a brand new report, 2025. And you can see on the left side that the majority of high fragility contexts and countries have a very high level of remittances percentage in comparison to their GDP. And you can see that in high fragility, high fragile countries, more than half of the external development finance is covered by remittances. A similar amount is also for medium and low fragile countries, while when we look at the extreme fragility or extreme fragile countries, still it is a very consistent amount, a bit lower, but because of a much higher percentage of ODA, of course, and you can also see that there is zero FDA that goes to extreme fragile countries, and therefore you can understand even more how important is the amount of remittances flowing in that country. Why are remittances so important for IFAD? First of all, we are talking about more than 1 billion people involved in the remittances market. 1 out of 7 people in the world basically are either sending or receiving international remittances. But the second aspect is that up to 40% of remittances goes to rural areas, basically where 79% of the world's poor live and where IFAD intervenes. Let me give you some examples on this. In Senegal, for instance, according to our estimates, the percentage of remittances from migrants originating from rural areas is above 50%, is 59%. In Honduras and other countries where we are about to intervene, 37.6% of receiving households are located in rural areas. Or in Nepal, where we have worked in the past and we are continuing to work, about 38% of rural households receive remittances according to our surveys. Or let's look at Central Asia. You saw that Tajikistan is receiving more than 45% of remittances, share of their GDP in remittances. So in Tajikistan, most rural households have at least 1 or 2 family members working abroad and sending regularly remittances home. So again, remittances are extremely important for the economies of their countries and are even more important for the rural areas where they count the most. Another important aspect of remittances is related to the cost. We know that there is an SDG target 10.C that says that by 2030 we need to reduce to less than 3% of the cost of sending remittances, but unfortunately we are still far from that result, from that figure. At the moment, the cost of sending remittances is around 6.62%. And which means basically that if you send $100 in remittances, $6 are lost, are wasted in the transition, let's say. And you can see from this graph also that cash transfers are a little bit more expensive than the global average, while digitalization is helping reducing the cost. And this is a very important aspect, and we are going to talk about that a little bit more in the next presentations. Also, geographical differentiation here. You can see that the most expensive area in the world to send remittances to is sub-Saharan Africa, with an average cost of above 8%. It remains very high, especially in the southern Africa, where there are some remittance corridors where the cost is above 15%. Now, what is our approach? The financing facility for remittances is financed by a number of donors, IFAD, of course, the European Union, Luxembourg, Spain, and SIDA. We just heard that. What you can see here is our theory of change. Basically, the remittance cycle, or what we call it, is the way we approach the remittances impact to development. On the first step, one of the main drivers, of course, of migration is the lack of income-generating activities. Then migration occurs, and once the migrant is stabilized in the host countries, the migrants start sending remittances to their families and communities back home. Now, if that amount is not leveraged, if there is no intervention on that particular point in the cycle continues. Basically, non-productive expenditures persist. there is still lack of income generating activities and people will continue to migrate abroad and sending remittances. But we intervene exactly there when remittances occurs. And if leveraged, meaning if we intervene in that particular aspect by providing access to additional financial services, savings mobilizations, asset building, income opportunities from the remittances that they are receiving, and job creations. Basically, if you leverage this amount of money that is regularly going to those families, communities, you will break that cycle. And this is what we are aiming at with our intervention. Here you have an example of how remittances basically, what the remittances journey looks like. In the host country, according to our estimates, indicatively, a migrant keeps for himself 75% of the expenses, and they are spent in the host country. But every month, or at least 10 times a year, at least 15% of the income of a migrant is sent regularly to their families back home. So this 15% sent equals to up to 60% of the income on the receiving end. So you can really understand from that the impact of remittances in the economy of a family back home. This 60% is partially used for immediate needs, indicatively 75%, meaning covering combating, fighting poverty, putting food on the table, helping healthcare, this kind of immediate needs of the family. 25% of this amount, indicatively, is used for additional and more sophisticated needs. It's used in savings, it's used for investment. You can see we have associated it to some SDGs. You send children to school. It can be used in investment in infrastructures, water and sanitation. And I've added also the SDG 13 because more and more we are seeing that migrants and remittances are contributing very much also to climate resilience. Basically, they are helping their families back home in mitigating the effect of climate change. Of course, there is also another aspect which is very important that I'm going to finish in a second, is the diaspora savings. We were seeing a very huge amount in remittances, but migrants are also savings. Indicatively 10% of their income is saved. So according to some recent estimates made by the World Bank, there are at least 500 billion US dollars in savings of their migrants that can be used for investments back home if provided with the adequate financial mechanism and business opportunities to invest. The Facility for Remittances, in a nutshell, is a 75 million program partnering with over 230 partners all over the world. We have implemented more than 70 projects worldwide. And I'm going to finish with that just to remind you that the 16th of June is the International Day of Family Remittances. It has been proclaimed by the United Nations General Assembly in 2018. We are very proud at IFAD that we are the originating, let's say, entity for the International Day of Family Remittances because it was proclaimed 10 years ago by our governing council before going to the General Assembly. And we are running the campaign. So this year it is linked to the Financing for Development in Sevilla, and we really call for all the participants and the stakeholders involved in the remittances market to join the campaign, highlighting this incredible contribution that migrants are offering for their development of their families and communities and countries back home. With that, I'm going to leave you because I'm sure that my colleague Sarah will enter into the nitty-gritty of all our operations. Thank you.
Yeah, thank you, Mauro. And now I want to quickly turn to Sarah Hugo, who's the Senior Strategic Knowledge Management Specialist at the Financing Facility for Remittances. And she's going to speak a little on the data, policies, and innovations that the FFR is doing. Go ahead, Sarah. Thank you.
Hi, good afternoon. Had problems there. Good afternoon or good morning, good evening, everyone. It is a pleasure to be joining you today. As Mara said, today I'm going to be focusing on some of the more technical and operational implications of working with migrant households in rural finance. In just 10 minutes. We'll be looking at how migrant household profiles can inform product design, how digitization and integration are unlocking greater value, and how tools like RemitScope help us to design smarter and targeted services. This is just a short overview, so please also feel free to reach out to us afterwards for more details. And afterwards, you'll also hear from some private sector voices who hopefully will bring some of these concepts to life as well. Do I switch to the next? Okay, down here. Okay, so first of all, it is important or critical to really understand the client segment that we're talking about, which of course varies significantly from country to country. In many cases, however, remittance clients aren't just your typical rural client. They often receive recurrent, relatively high value inflows, be it through informal channels, in cash, or increasingly into accounts or mobile wallets. And just to give a couple of examples here, in terms of context, in Mali, 20% of rural households receive international remittances. And the average remittance that they receive per annum is $1,800. That's in comparison to a per capita income of about $900, so double. In the case of Nepal, where a third of working age men migrate for work, often leading to a shift in gender roles, a small survey recently with cooperatives found that remittance-receiving members had 6 times more savings than non-recipient members. So what this really tells us is that migrant households often have a greater capacity to save and to invest, and that they require tailored segmentation and product strategies within rural financial systems. These households have significant financial potential, but they're not always served accordingly. So when we talk about remittances and maximizing the development impact, we typically focus on 2 parts. First of all, access and use. So let's start with access. Access is key in terms of being able to access formal remittances both conveniently and safely. But remittances are also being increasingly received digitally into mobile wallets or bank accounts, especially across Africa and Asia. According to GSMA in 2025, international remittances are now the fastest growing mobile money use case. This is a major opportunity. Remittances are a powerful gateway use case driving financial inclusion. Their regularity makes them ideal for driving account uptake and introducing new users to formal financial services. Digitalization reduces costs and improves convenience, but more importantly, it also enables service connectivity. Users can store funds without having to cash out. Providers can layer additional services like savings, credit, and insurance. And it importantly creates a data trail that supports segmentation, eligibility, and design. The challenge is to ensure that remittance flows link to something deeper than just payout. Okay. So once remittances are digitized, or even when they're not, we must look at how they are then used. Too often the journey ends with the client just going in, collecting cash from a local branch or an agent. And the goal should be to ensure that remittance recipients can securely store funds in a basic account or wallet, access simple saving options, and then over time qualify for credit or insurance based on the regular inflows. These services can be bundled, as we'll hear about later, or sequenced as trust grows. The key here is that we don't need complex features. We just need a system that goes beyond the transaction and then supports the client to grow. This is really about creating continuity from receiving money to saving it to using it and then building that long-term economic or climate resilience. But every intervention should begin with ecosystem mapping because remittance markets vary significantly across countries. And the key question here is to understand who is paying out remittances, who is operating in these markets, money transfer operators, banks, mobile money providers, and also fintechs as well. And are these the same as who is providing rural finance? Also to understand what is the strength of the agent and the digital. And this then also, through this analysis, then also opens up space for new players, for perhaps savings and credit cooperatives or microfinance institutes to come in and act as payout agents, provide remittance services, as wallet providers and fintechs can enable those integrations, and then as layering services across actors adds value to the whole ecosystem. The remittance ecosystem may look different from that kind of traditional rural finance, but that's exactly where there's that opportunity for new partnerships in order to unlock access. So what does this look like in practice? In terms of in the Gambia, we have been working in partnership with the private sector and been supporting that digital integration between money transfer operator, mobile wallet and microfinance institutes, allowing users to receive the remittances into a wallet and linking that to savings accounts and access to credit. Or in the case of in Nepal and East Africa and beyond, we've been supporting cooperatives who have been brought into the remittances value chain. In the case of Nepal, offering remittance-linked savings and remittance-linked loans products. Or here in the case of Moldova, with our support, cooperatives have been going that one step further in terms of not only paying out remittances, but also using them as collateral for loans and matching them with grant eligibility to support their productive use. These are not just theoretical methods, they're working, replicable. But in order to truly shift from receipt to use, product development really must be paired with financial and digital literacy. In high migration areas, and this is really key, in high migration areas, financial education must include remittances and aspects of the migration cycle in order to be inclusive, relevant, and effective. Across most of our projects, financial literacy plays a really important role, focusing on helping users to reframe their remittances as income, to be able to plan and budget effectively, and to move from the mentality of short-term consumption to longer-term planning and wealth building. We've worked with banks across Latin America and Central Asia in order to onboard clients at the point of cash receipt through financial education, helping to shift behaviour from cash to account and to mobilise savings. Or in the case of Nepal, financial literacy and entrepreneurship training through local cooperatives, providing education to more than 60,000 people, mainly women, to use remittances for more productive purposes. These efforts make services more relevant and more likely to be used intentionally. And to support all of this is data, because data really underpins all of this decision-making at a policy level, as we'd heard, but really practically at an operational level in terms of strategy, informing decision-making in terms of designing the right products and understanding who's operating in the market. And for this, as we'd heard earlier from Teresa, we're really proud to be presenting RemitScope, which is a free-to-use online platform at www.remitscope.org. And it's really a home for remittance and remittance-related data, a market diagnostic tool that has been born out of industry demand. As I say, it is free to use and collates and shares primary data, but also data from global databases as well. Currently with data on remittance flows, migration, also broken down by corridor, gender, digital payments infrastructures, as well as insights into those regulatory environments, the operating environments, and the market players. It has 54 country profiles on countries in Africa and in Latin America as well, and will soon have Asia coming as well. So I really encourage you to take a look at it and to use it in your work as well. And finally, I just want to end by kind of stressing the point that migrant households are already part of the financial system, but they often enter through different doors. And if we design for those entry points through remittances, we unlock new pathways for savings, for credit, and for resilience. If we digitize, bundle, and educate, then we can really transform remittances from the simple transfers into those long-term inclusion, for long-term inclusion and development. Thank you very much.
Thank you, Sarah. Very good. We now turn to some voices from the private sector and product development and investment and innovation. And first, I'd like to invite Mr. Godwin Kafui Agozi, Head of Remittances at Fidelity Bank in Ghana, with extensive experience in driving inclusive finance and strategic partnerships in the remittance ecosystem. Welcome, Godwin.
Thank you, and good morning, good afternoon to all of us. And then can my screen be seen, please?
Yes. Yes,
Okay.
we can see it.
Okay, I'm having a slight challenge moving my screen, so let me just go because of time, then if I'm able to. So for us, with Fidelity Bank, we have made a lot of interventions with remittances with the help of IFAD. So I would like to share some of our experiences with you. So let me start by talking a little bit about the landscape in Ghana. Ghana is the second largest when it comes to remittance in Sub-Saharan Africa. We are second to Nigeria. I think in 2023, we had about 4.6 billion, which I think is very helpful to the nation. For us in Ghana, we are predicting a 1.5 growth in this year in terms of remittance growth. We have some key corridors that really bring money into our folds. We have United States, Canada, Germany, Netherlands, South Africa, and the Ivory Coast. For us in Ghana, remittance, as has been said by the earlier speakers, is very key to our economy. It helps us significantly to drive financial inclusion, and then poverty alleviation. It also helps a critical source of foreign exchange for us as a country.
Lorna, I think he has some connection issue.
Okay, give him 30 seconds and then maybe we can move on to La Salette if he doesn't come back to us. Okay. Just in the interest maybe of moving this along, can we go to Ms. La Salette Gumban? Just and then Godwin can come in afterwards, which is kind of a shame. So Ms. La Salette Gumban is the unit head of NATCCO's advocacy program She has 15 years of experience in development and cooperative work, including the diaspora program, which I think is what we're going to hear about today. So welcome, Ms. Lasala.
Hello, good afternoon, everyone. Good evening from the Philippines. We are pleased to share with you the experience of NATCCO in the implementation of the program for the overseas Filipinos. But first, a brief introduction about NATCCO. NATCCO is a national federation of cooperatives in the Philippines, founded in 1977, with over 1,000 cooperative members. And NATCCO's partner cooperatives can be found in 77 provinces across the country and serving 7 million individual cooperative members. We envision that through the diaspora program, global Filipinos will not only become investors in the cooperative, but will also play active roles in its leadership. With the support of co-ops, they can be assisted in achieving their entrepreneurial goals, enabling their contributions to the local economy and the country to go beyond remittances, that they can also create sustainable and impactful sources of income, even after they have reintegrated. Through the years, overseas Filipinos are contributing significantly to the Philippine economy, with remittance amounting to $34.94 billion in 2024, and remittances accounted for 8.3% of the Philippines' gross domestic product. And growth was driven by increased overseas labor demand, especially in healthcare, tech, and skilled trades. Our program with the overseas Filipinos started in 2015 when NATCCO became a partner for the IFAD project, the regional program on remittances and the diaspora investment for rural development, where we linked cooperatives with overseas Filipinos working in Malaysia and South Korea. And every year, NATCCO and its partner cooperatives celebrate the International Day of Family Remittances, an observance we have marked since 2018. We believe that co-ops and remittances play an important role in local economic development. When people save in cooperatives, they help mobilize their local communities. They contribute to economic growth of their communities, ensuring that development is not limited to big cities and municipalities. The money that our OFWs save and invest in the cooperatives are used to provide loans to farmers, fisher folks, and micro entrepreneurs. When the project ended in 2018, NATCCO sustained the program and rebranded it as its diaspora program. Today, the program is under the advocacy unit of NATCCO, and we continue to capacitate co-ops through learning sessions and programs. We also hold regular learning sessions for OFWs and their families, and we continue to build and expand our networks. Here, the log frame presented illustrates how the resources of cooperatives are utilized to create activities that generate measurable outputs, ultimately leading to economic and social outcomes for OFWs and promoting their financial resilience. We have identified 5 outcomes for the financial resilience of OFWs. They have built a sufficient emergency fund, used debt for productive purposes, established various income streams and investments, and obtained health and life insurance. Here we are seeing the data of OFWs and their families. We have a total of 36,759 OFW and family members who became members of the cooperative with our 20 partner cooperatives across the country. And the program has opened new opportunities for co-ops to expand their services to the overseas Filipino market. From a financial perspective, the program has increased the internal fund generation of co-ops. totaling to $47 million from our 20 co-op partners. However, this data is not yet complete as some co-ops have yet to submit their reports. Overseas Filipino deposits are primarily used to support the credit operations of the co-ops, funding the needs of entrepreneurs, farmers, fisher folks within the communities. And this in turn facilitates the development of the local economy. There are several ways for OFWs to build their wealth in the co-op, as their membership is not only investor co-op relationship, but also grants ownership rights and all related privileges. And here we are seeing some examples of the wealth building products developed by our cooperatives, especially designed for the OFWs and their families. Apart from building the wealth of our OFWs, the program also strengthens the wealth of their communities. By utilizing the remittances to provide financial services to grassroots communities, the rural economy is mobilized, promoting inclusive development. A percentage of the cooperative's net surplus is also allocated to community development through dedicated funds. This support helps finance programs focused on the environment, disaster risk reduction and management, and other vital initiatives. While our OFWs build their own wealth, they are simultaneously contributing to the prosperity of their communities. And these are our partner cooperatives across the country, since the provinces of origin of the OFWs are scattered across the archipelago. Our goal is to have strong cooperative partner in every province. And when we talk about wealth building products for OFWs and their families, these include the following: the share capital, commitment type, and purposive savings. OFWs can also access financial capital through various credit services of the co-ops at much more affordable rates. Co-ops also offer incentive products like insurance, as well as non-financial support services such as business development services and market linkages. Our partnership with other organizations like the university, the Ateneo School of Government, through its leadership, financial literacy, and social entrepreneurship program, has enabled us to expand our reach to more countries in Asia and the Middle East, thereby serving more number of overseas Filipinos across the world. We are also strengthening our partnership with the government and just entered into a memorandum of understanding with the Department of Migrant Workers. Through these partnerships, we are able to reach more OFWs in the provinces. We also provide platforms for learning and knowledge sharing through our monthly co-op conversations, where we feature our partner cooperatives in every province. Our experience working with co-ops has provided valuable lessons on how to sustain the program. We have identified 4 key factors. First, the presence of an integrated system of co-ops serving OFWs, particularly with a dedicated team focused on the program. Second, partnerships with the government and other organizations that support the expansion of the program's reach and align efforts with the government's priorities. Third, harnessing technology to maintain active participation of OFW members, starting from the onboarding through ongoing member engagement initiatives. And finally, ensuring that cooperatives operate in a safe and sound manner, enabling them to continue serving and earning the trust of the OFW members. Thank you very much for your attention.
Great. Thank you very much, Ms. Lasalette. I want to let Godwin come back. If you can, I think we heard the last was just a little bit of a idea of the market for remittances. So I want to let you go on. Thank you very much for coming back.
Apologies. Maybe in order to avoid any technicality. Let me just go through it quickly. Apologies. So I was on the part where I was discussing Fidelity's approach to helping remittances digitize in the country. So what we did was that one major thing we did for digitization was to be able to convert all those who pay cash to become account holders. So we ran an intensive promotion with incentives so that people will be encouraged to open accounts or use mobile wallets to receive their funds. And in that, when you also save, there are incentives also for you to save. And then we embark on the financial literacy program. We use a concept called IVR, interactive voice response, whereby your mobile phone contents were developed already. So on your phone, at your convenience time, you just dial a number, a toll-free number, then you'll be educated on the importance of savings, why you need to open an account. And that was very, very well appreciated by the market. This was sponsored by IFAD, and then we did that in different communities. And I'm happy to tell you that, to inform you that the outcome was great. 20,000 people listening to the IVR. And then out of that, people also, 8,000 open an account, were able to raise a deposit of about 4.2 million Ghana cedi during the period of the project. So we were able to inculcate the culture of savings. So when they receive their remittance, they are encouraged to save a portion of it. And then we give them incentives as well. Yeah, other things were given when you come to the banking hall. This was well appreciated by the customers. So from that, what we intend to do as a bank is to develop this kind of products for them nationwide. We did it in pilot areas. Now we've developed it for the entire bank. So that's one of the things we are doing now, so that throughout the whole country, everybody will benefit from the lessons we've learned from the project during the IFAD sponsorship. So we are now, the innovation of the project is ongoing. And we also bringing on board more MTOs as well to be able to rake in more FX and then continue with the financial literacy. We also have what we call agencies as well throughout the whole country. We have over 5,000 agent points. So that when banking facilities are not there, these agents are there to really help them with their banking needs. So basically, that has been our intervention as a bank to help digitize remittance and to make it easy for people to receive their remittances wherever they are in Ghana. Thank you.
Thank you very much, Godwin. And I think at this point in time, we still have a few minutes. We may go a little bit over, but I think we still have a few minutes for questions. So you're welcome to raise your hand or place the questions in the webinar chat. And we will see if anybody has questions from some of our very interesting presenters. Not?
Lorna, I had seen one question
Okay.
earlier on. I think it was directed to the FFR team if they had ever organized a remittance World Day in Congo, and if yes, if it was a successful event or if you were considering in organizing one in Congo.
Thank you. Let me take that one then. Thanks a lot for the interest and the question. So actually, IFAD is not active in Congo on remittances and diaspora investment. So basically, we don't have any direct intervention in the country for the time being, and we don't have expertise in the country on the specific topic. So, but I would really suggest you to go and visit the www.familyremittances.org website. You will find all the information about the this year campaign. I don't know if you can type it in the chat or if you did it already. Thanks a lot, Sarah. And you will find a Trello there with all the social media tools and communication on what to do if you want to organize an event or promote the International Day of Family Remittances through all the social media or the other media that you want, or join the campaign. And that we will be very, very pleased to receive your inputs, information about the activities and what you are going to organize in the country. So I really would like to suggest not only the person that asked the question, but every participant, and go and check that website, the official website of the International Day of Family Remittances campaign.
Thank you, Mal.
I also...
Go ahead.
No, I saw another question.
There's another question. What are the challenges that Fidelity encountered, if any, in Ghana with their work in remittances, and how did you address them? That's for Godwin.
Thank you. So I think one of the challenges we had initially was locations that people have to take their remittances in. So what we did was to be able to convert them to open accounts and also expand agency banking facility to this area to make it more closer for people. And then the adaptation of opening an account was also a challenge. We have to embark on massive education, go to churches, markets to be able to convince them that opening an account is helpful, telling them about the benefits of opening an account. And that was how we were able to overcome that challenge. Education was key and incentives were also given. Thank you.
Thank you very much, Godwin. A couple more. Are there any of the examples of looking into remittances and climate risk insurance for farmers in rural communities, targeting women specifically? Who would like to, does anybody have any examples of that?
Mara, do you want to...
No, I think you can start and then I can complement.
Yeah, at the moment not, but this is very timely, as it is something that we will beginning to look at. We have a new program that is launching called Resilient Remit that will be looking at exactly that. So I'll let Mara say a little bit more around that. But it is an area that we have looked at and are looking at it already in terms of kind of linking remittances with insurance. So we have a pilot at the moment and a report hopefully coming out later this year looking at kind of remittances and linking with insurance. That's actually kind of hospital and health insurance. But I think the applications there are clear, and it is something that we are looking at and have some reports around kind of remittances for climate resilience and climate adaptation, and another report that I'm happy to share on here as well. But Maro, anything to add on that in terms of watching this space?
No, thanks a lot, Sarah. No, I think I can add to that we did a report in Senegal on remittances for agricultural risk management a couple of years ago that can be shared also with all the participants later on, and we are about to start a program in Senegal and Mali on that, as you rightly mentioned, and in other countries. We have also presented 2 recent studies on the impact of remittance and diaspora investment for climate resilience. We presented them at the COP last year, and basically there are some very, very interesting findings out of those reports. For instance, that people that are receiving remittances basically tend to invest 5 times more in natural fertilizers than the families that are not receiving remittances. So these are just some examples on how migrants are already really contributing to the resilience to climate changes through the funds that they are sending. They just don't call it climate change resilience. They just, but they are already doing it. And what we would like to do, and we will do actually, is really to support that. That migrants that are contributing to the climate resilience with innovative solutions in order to facilitate that even more.
Okay, thank you, colleagues. And final question we have here is, what projects do you have in Latin America? What are your contacts? What are your upcoming events? Maybe you could just tell us if you have any projects in Latin America, and then we can also provide specific information later.
We are now in the design and preparation of a number of programs in Latin America. We are in contact with our country directors over there, the IFAD country directors, and we can provide you more information and more updates in the coming months, I think, about that. But we are indeed targeting Latin America more and more in the next months and years, because it is indeed a very important market for remittances.
Thank you, Mauro. Okay, I want to, just before we close this, thank you for your patience with our small glitches. I just had a few concluding remarks, and first a word to my IFAD colleagues, that through FFR, IFAD's portfolio has a unique entree into leveraging our work with remittances to build and invest in our own beneficiaries and clients by leveraging remittances into savings, investment products, and other types of insurance products as well to finance our clients. So in some countries, this could be a massive source of funds to self-finance or intermediate. And we are now integrating remittance pilots of that ilk into our designs in high remittance countries. So I encourage my colleagues in IFAD to see how we can best utilize and leverage all the work that our FFR colleagues have been doing. And I now wanted to thank you all for your interest and questions, and which will all be captured and will be supplied back to you, hopefully with some answers, along with the webinar itself. And we will be sharing the RemitScope tool, which I think we also have links in the chat, and ask you to fill out a short survey from this webinar, the results of which will help guide us for future KM interventions. And finally, thank you to our speakers in absentia, Pieternel Boogaard, Therese Anderson, Mauro Martini, Sarah Hugo, Godwin Kafu Agozi, La Salette Gumban, and our masterful organizers, Clara Zaccanini and Anna Anais Petitjean. I tried to practice that. We truly appreciate all of you, all of our presenters, all of our attendees, and we hope that you enjoyed attending this event. And until next time, I close this. Good night.